Hi, in this video you have the chance to test your financial intuition. Today we tackle a case from the banking sector. I'll guide you through a number of questions. You'll pass the test if you score at least 21 points. Global Bank is a German commercial bank with operations in Germany, Italy and Spain. Following a request from the regulator, Global Bank must implement a number of internal cuts and divestments. In particular, Global Bank has decided to focus on only one of the two foreign portfolios, either Italian or Spanish. The bank's CEO has reached out to you for advice on this matter. Question number 1. Could you briefly explain how the business model of a commercial bank works? The model is simple. Banks issue loans on which they receive an interest rate. This is the loan interest rate. To finance these loans, banks borrow money either in the financial markets or from the deposits of their customers, for which they pay also an interest rate. This is the funding interest rate. The gross profit of the bank is computed by multiplying the spread of the two interest rates by the loan volume. This gross profit is then used to cover other business costs. The CEO gives you the following information on the two foreign portfolios of Global Bank. Question number 2. Why is the funding interest rate the same for both portfolios, while the loan interest rate is different? Funding interest rate is the cost of funding, and it is similar across Europe. Among other factors, it depends on central bank action. In addition, the bank might use more favorable funding sources regardless of the geographic area in which it does its business. The loan interest rate depends on multiple factors, such as the creditworthiness of the borrower and local competition. The CEO tells you that the default rate of Italian customers is on average 1%. The default rate of Spanish customers is 2%. Assume for simplicity that loans are repaid with interest only at maturity and that local operating cost is negligible. Question number 3. Which portfolio is the most profitable? Question number 4. So you choose the Italian portfolio, or are there other factors that should be considered? When choosing an investment, it is important to take into account the riskiness of the investment. The average default rate tells you what happens under normal economic conditions. But what would happen in rare and extremely adverse scenarios? In the case of economic downturns, banks pay for the loss with their own capital. In this case, the risk capital allocated to the Italian portfolio is 18% of the total volume. For the Spanish portfolio is 24%. Question number 5. Which portfolio do we choose now? As you can see, the Italian portfolio is still the most attractive. Question number 6. What additional elements should you investigate before making a final decision? Before making a final decision, you might want to have a look at further potential revenue streams in each country, for example through commissions, and the strategic importance of the two segments in terms of potential growth. Besides, you should consider how easy it would be to re-enter the market in the future once we have left. Also, diversification of the bank's portfolio should be considered. Congratulations, you have now closed this case. Finance and banking cases are always very specific and full of jargon. This makes them among the most feared case studies in interviews. If you want to learn more, don't forget to like, subscribe and check out our videos on this channel. Thanks for watching.